Be better at solving problems than making money?
We have finally understood exactly how to go forward. We have 168 million worth of NPV on PEAs on these four projects for a $40 million market cap company. And they're low capital and we can put them into production.
You guys are all getting paid. These guys are waiting for you to make money. Can you demonstrate to me how you're going to make money for shareholders? Welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, do give us a thumbs up. And if I could ask that you leave your comments below, helps us understand the sorts of questions you'd like us to be asking the company, what you think of the company, and indeed how you think we're doing. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Warren Rehn. He's the CEO of Golden Minerals Corp. They're a TSX and NYSE explorer. They are after gold and silver. They have projects in Mexico and Argentina and also in the US. The core focus for them being Rodeo and Velardena, which are gold and silver projects. They have been trying to crack the code of the metallurgy for Velardena, and they think they've done it. But in the meantime, they've been working up the Rodeo Project, very small, short mine life, 2 years, but it might be enough to fund the Velardena project, and that's what they're aiming for. That seems to be the solution. Also in the background, they have done a earn-in with Barrack, which has given them a little bit of cash into the company, and Barrack have the opportunity to earn 70% of that project. It's which leaves potential of having to come up with 30% of the funding if this indeed works out. But it's $10 million to be spent over an 8-year period of time. So I guess they've got a bit of time to work out how they do things. We talk about their business model and strategy moving forward and what indeed the market thinks of the management team, having taken a long time to get to this point. Do take a look in the description below at some of the topics discussed. If there's anything that interests you in particular, click on the number, that's called the timestamp, and that'll jump you to that part of the interview. But enjoy what Warren has to say. Hello, Warren. How are you, sir?
Doing well, Matthew. How about yourself?
Not bad. Surviving. We ordered a barbecue over the weekend. It arrived. I'm very happy. This just made my day whilst trapped at home. So what about you? You're in Colorado?
Yes, I'm in Denver, Colorado. It's our home office. Yeah, the company is still working from home for the most part, coming into the office when it's possible. Colorado's just barely opening up again, but we're making it.
Good man. Well, look, I appreciate you're making the time to come on the show, tell us your story. It's new to me and everyone watching this. So why don't we kick off with the compulsory 1-minute overview, and then we'll pick it up from there.
So we're an exploration stage mining company. We're focused on gold and silver. Our main assets are in Mexico. We also have substantial assets in Argentina, and we've recently picked up properties in Nevada. So our goal is to become a producer again. We'll start small, obviously, but to become a sustainable, profitable producer within the next year. We have a recent project that we put together in Mexico that we can start production at, and we feel it will be a very low risk, highly profitable operation producing gold at an existing mill. Low capital startup, good income, and that'll carry us on to get some of our other properties in the pipeline up and running. So the focus will be Mexico, and from there we'll work on our other pipeline properties in the US and in Argentina.
Great. Okay. So thanks for that. You do have quite a few moving parts in the sense you have a lot of properties, Mexico, Argentina, and US, as I noted. So I'm trying to understand what type of company. You describe yourself as an exploration company, but you've recently just done an earn-in with Barrick as well on one of your properties. So how would you best categorize yourself, and what's the business plan? You described it there as starting small and building up into kind of producer. So do you want to talk us through what was the game plan when you started this company, or when you started, when you decided what it was that you wanted to be, and how do you think you're going to get there?
Yeah, the history goes back a ways back to in 2009. The company got started from a previous public company, And we started with exploration assets in Argentina, primarily a silver property, Quevar. That's the one that's recently been optioned out to Barrick. And we're very pleased to have Barrick in on that property. They see a lot of potential. Now, we had been doing exploration mostly on a small silver deposit there. They see a lot of potential for a large gold deposit. To have them come in and do the exploration that the project warrants is fantastic.
Yeah.
And that lets us focus, kind of spin away towards Mexico, where we acquired production staged assets in 2010, 11, where we acquired 2 mills and a series of mines in the Velardeña district. When we acquired it, it was producing. And that was a deliberate pivot from being totally focused on exploration to moving towards production. Production companies get a higher multiple of share price per net asset value. It's a much more sustainable operation, business plan, and we felt that we could continue. We had some issues with that project, mostly with the gold recovery. And so we shut down, and we've looked at ways to get that started again. That's the Velardeña mine itself. And recently we've come up with a plan that looks very realistic, using a bio-oxidation approach to get the gold credits. So that allows us to change from the exploration focus to the production focus and continue on with our plan to be sustainable.
We'll come back to the Barrack earning in a second, if we may, but let's stick with Velardeña. You picked that up in 2011. So between then and now, you said you've experienced a couple of issues, but you may have kind of cracked it with this bio-oxidation. So why did it take so long to kind of get to a solution which worked for that?
So it's been an interesting process. We had 2 issues, basically. One was the gold recovery. The other was dilution. They're narrow veins, and the mining is somewhat difficult and expensive. The price point's critical, but you also have to have the revenue from the main parts, the main metals in the deposit. We were getting good payable on the silver, very poor payable on the gold. The recoveries were bad, and the way we were able to sell the concentrates with the gold wasn't attractive to us. So we shut down in 2013 in the falling metals price environment. We did some internal additional exploration on some of the vein systems, increased the resource significantly, looked at ways that we could improve on the recoveries without a lot of success initially. So really it took until the recognition of bio-oxidation as a viable process worldwide. And frankly, one or 2 projects in particular that were very successful using that same technology gave us the insight that we could use that for ourselves. So a combination between developing technology worldwide, Outotec, a company that actually had licensed the technology, has done a lot to improve the overall workability of the bio-oxidation process. And that combination of factors led us to the aha moment where we could see that we could actually get the kind of recoveries that would make this project viable. So that was a recent report on some studies that Outotec was doing for us in South Africa that we received in December of last year that led us to be able to redo the PEA, the preliminary economic analysis on the project using those recoveries. And we saw that we had a very, very interesting project with NPV of 85 million US with a life of about 10 years and excellent, almost 2 million silver equivalent ounces produced per year in a small mine, but very profitable mine.
I'm always interested in the management team and trying to understand the kind of psyche, what type of people are they? Because, so from 2013 till the kind of eureka moment more recently on oxidization that must have tested your patience, and you may have despaired at moments. So how did you, as a small I'm looking at the charts here. Very small market cap company, probably running on not a lot of cash. What was your thought process? Did the board just suddenly go, this is just never going to work, let's pack it in? Or what was the workaround?
There were a couple of realizations along the way with the board and the management. I joined the company as VP Exploration. I'm a geologist by background in 2012. I didn't take over as president CEO until 2015. So the period from 2012, when I was with the company, to 2015, the company was being run by the chairman. A lot of experience in big copper projects. The company had some difficulty adjusting to the size that we really were. It was an iterative process with the board realizing that we did have these issues with the recoverability of the gold. The initial thought process behind the Velardeña acquisition was that we would be able to use a pressure oxidation system, autoclave basically, to get the gold out. But the project wasn't quite big enough to support the capital required. So the iterative process of looking at what the cost was for the process that would work versus what we could do and what we could afford to do, what the market would allow us to do, was where we sort of had to wiggle in to understand exactly what were the possibilities, and that took some time. The restart in 2015, based on the additional exploration success, was based on an understanding that some of the veins had better metallurgy than others, but it wasn't significantly better enough to make it work. So the process took some time to understand exactly how this would go. And the board is very supportive all the way through. They're very, very experienced board. Many of them have been CEOs of large mining companies in the past, very supportive of our activities. But it takes time to go through and get the sort of technical expertise, technical knowledge that you need to see exactly how this might work.
Okay.
What capital requirements.
Okay, so that's helping. This is helping me because I noticed there's a kind of run up in the share price. You got to $1 by late 2016. So people got excited again in 2016, and then since then it's been a steady decline down. So, I mean, do you think the market perceives you as, well, tenacious? Fine, but it's on someone else's dollar. You've got to thinking of the investors. So are you better at solving problems than making money, or do you think you kind of see a way forward here to be through this with all of the projects?
I think that exactly what we've found and what we've put out in the news flow this year shows that we have finally understood exactly how to go forward. We've solved the problem technically. We know how to make it work. We've solved with the bio-oxidation for Velardeña, with the mineability of the Rodeo on a small basis to give us capital to get started on it. And so, although it's taken time, I think it's very clear, especially to me, very clear what the path is going forward, what moves we make, and we frankly have the technical understanding now of both the Rodeo and the Velardeña projects to be able to move forward with confidence at low risk and with low capital to get cash flow finally back into the company.
Well, I think that's great for new people coming in, but historic shareholders perhaps be less enamored with that description, because you're going to have to go some here to kind of make people whole again, depending on what point they came in. Can I talk about Rodeo? Because what struck me was the size. Now, you gave me some clues at the beginning. Okay, it's very, very small. And without the explanation, I always question why would you bother? It feels like kind of scraps. But what's your plan with it?
The Rodeo, if you look around the world, the spectrum of mining opportunities that we have available to us out there, and you look at something that is low cost and low capital to get started, but can make significant money relative to that capital amount invested, there's very few that are low risk. Rodeo is one, probably the best one I've seen. Even though it's small, it can produce 20,000 ounces gold payable a year for 2 years, a little bit over 2 years. But what that does to us at a cash cost of less than about $800 per ounce of gold, it gives us a very interesting cash flow over that period for less about $1.5 million invested, $500,000 capital, some working cap, and then we start making $1 million a month for the first 2 years. That's very significant for a company our size. So while it appears small, the risk is low. It's open pit mining, high grade, relatively high grade for open pit. 3 grams is a great grade for open pit. Low strip, low waste to ore ratio, and we have the mill facility already built. So there's no risk on the process side. The mining side can be by contract, very low cap. We've got the agreements in place with the landowner. The only thing that we have yet to get pinned down is a mining permit, which should be no problem, other than the delays for the government given the COVID crisis in Mexico.
Right. So I guess you're saying because of the low capex requirement, you're going to be financing that. So you're happy to run off of a PEA. You don't need to go and raise some money elsewhere where they may demand maybe a feasibility or pre-feasibility study at the bare minimum. So how are you wrapping your head around saying PEA data, that's good enough for us to get going, it's low cost, high return, let's go for it? Is that?
Yeah, good. We're going to de-risk it further. I don't think, and we probably will not publish pre-fees, but we have already pre-fees style data behind us. There's 2 points where I need to do a little bit more de-risking. One is additional drilling, just to look at the details of the high grade limits. So, we have good drill density. It's all indicated or better right now, but we'd like a little bit more detail on the limits of the high grade.
What do you know today about that ore body?
Right now, it's very well drilled off. For the PEA level, and even for PFS. If we have a bit more, additional testing on the metallurgy, just to confirm more than do additional study, confirm the existing results. It's grind size dependent. We need a fine grind to get the gold recovery, but it's very it's good recovery at plus 85% of the gold recovery in a mill situation. We just want to make sure there's not a lot of variation in that. We want to make sure that the grade is exactly where we think it is, just to minimize that risk, and that will give us pre-feasibility to feasibility style information, but we won't go to the expense and time of putting that report out because of the size of the deposit. As long as we're convinced that the risk level is low enough that we can carry forward, and I am convinced of that. Okay.
And how old are these mills?
So the mill was built initially in 2000, year 2000. Okay. It was built by Hecla Mining, then purchased by Minera William, which Gold Minerals now owns, and it's been leased back to Hecla here from 2016 on, and they've been producing. They're producing right now. Well, we shut down for a month in April, early May. We'll start up again, I think, at the end of this week, start processing. So it's an excellent running condition, right. Producing from the San Sebastian deposit of Hecla.
And what are the terms of the arrangement with you and when you get going?
So we own the mill. We've leased it out to Hecla.
Yeah.
And then they give it back to us at the end of 2020. So then we own it. We have it completely for our use. There probably will be interest on Hecla's part in the future to process additional oxide ores from their San Sebastian deposit, which is also close by. But the Rodeo deposit gives us our own production, better cash flow, better profitability from something that we're producing on our own.
Okay, and so you talk about getting into production or mining by early 2021. What are the things that you're doing between now and then? And how much money are you going to be spending doing those things? And at the end of it, what assurances do you have about getting the permits that you need in place?
Yeah, so the cost of the drilling that we're going to do will be less than $150,000. They're short holes, good drill contracts, low cost in Mexico for drilling. The additional metallurgical testing we'll do in-house. We have a complete lab of our own there. We have the facilities located at our mills. So that part is fairly straightforward and low cost, less than $200,000 to get the additional technical information we need to de-risk the project, in my mind, almost completely. So the main time delay is getting the mining permit from the Mexican government. So it's about a 4 to 6, well, it could be 4 months to 6 month process to get the permit. They've been closed since March at the Seminat office, where you have to actually apply for the permit based on the COVID crisis. They open up today. We'll have our permit application, which is ready to go. We'll submit that today or this week as soon as we can get an appointment with the guys, and we expect to have the permit in hand this early fall.
Okay, and then, so given that's the process, will you be going out to market to raise capital once you've got those permits in place to kind of deal with whatever your plans are?
We raised capital in April, and we raised enough, along with the other monies that we got in from both the Barrick deal and money on hand, to take us just about to production with Rodeo. So I think what our strategy will be, rather than going out to the markets for additional, we'll probably, once we have permits in hand and we're ready to go, we'll just need a bit of working capital to get us over the hump until money's coming in from selling doré.
Where's that come from?
There's a number of companies that are interested in loaning debt capital on this sort of a project. They've reviewed the data. They're very interested. They see it as very low risk as well.
Okay.
And so even without the PFS or FS type document, there are companies willing to go for 2 to 4 million in debt financing on this sort of a project.
And is that more expensive money because there's less data and there's in terms of the formal structure of pre-feas, feasibility, DFS, etc.? Are they willing to take that risk but charge you for the pleasure?
It's surprisingly inexpensive on an interest rate basis. And when you compare what the cost of us going to market for capital is compared to this debt facility, this money is half or less as expensive as going to market, when you consider the warrants and the fees involved in the public offering.
Yeah.
So we're quite pleased with the possibilities that are out there, and I think it's going to work very well for us and for the shareholder.
Okay, and I guess the cost of actually going through that study process as well, not just in terms of cost, but time delays. So it's you and the board are making risk assessments based on what you know, and this is the path you've chosen. Okay, interesting. Can we go back to Velardena? This is a slightly bigger project, obviously. It's under $100 million NPV, 8, I think you've gone with, have you?
Yeah, it's 85.
Yeah. How does that get financed?
So that one needs about 10 million for a combination of building the bio-oxidation facility. Costs about 5 to 6, and then you need about 4 million development capital. The mine is built. We have the equipment. We just need some additional underground development to have sustainable production from these veins, and we need to build the bio-oxidation facility. So that will mostly be able to be financed by the Rodeo income. When you look at the cash flow from Rodeo, that gets us most of the way to where we need to go. Again, there'll probably be a small need for a working cap loan or some sort of other financing right at the point of coming into production. But we see it as very doable at those sorts of levels, given the 10-year projected life of the deposit, and it's open at depth too. It could go for longer. It doesn't produce at large quantity, but it's quite profitable. Actually, the net of byproduct credits, the silver gets produced almost for free, and it's about a million ounces of silver straight up a year on this, which is not huge, but it's significant for the size company we are.
Right. Okay. And then, and just again joining all the pieces here. So if we then look at Quevar with Barrack, what are your obligations? In fact, if you just talk us through the terms of that agreement with them first of all, and talk about the cash that's come in, and what they're obliged to do, and what you indeed are obliged to do. Yeah,
sure. So the overall earn-in agreement, the option, it gives Barrick 8 years, up to 8 years to explore the property. and they pay all the costs over that period of time for the project. So that's a great help to us in that otherwise we're paying about $500,000 a year just to carry the project along without doing anything. They have some minimum work requirements over that period of time. The first 2 years are fairly light, where they just have to go in there and spend at least $500,000 a year, which is not much, but it's a commitment that means the project will move forward. Now, I know they'll move forward much faster than that, but they wanted the flexibility, so we allowed them that. But so they'll spend $10 million over the 8-year period to earn in, and over that period of time, they'll have to produce a pre-feasibility study on the gold deposit with at least 2 million gold equivalent ounces in it, which would be fantastic size for us, small for Barrick. They're looking for a plus 5 million ounce gold deposit, and they think they have good potential to find that. So they'll do the exploration all on their own cost until that pre-feasibility study is approved, at which point they could vest 70% and we'd have 30 that we could continue to fund.
You would have to continue to fund. Okay. You need to kind of keep pace.
After the burn in, we'd have to fund the 30. So we got, we had $1 million cash investment from Barrick into Golden Minerals at the time of signing. Mm-hmm. And we also have a additional silver royalty on any production they have, sort of to compensate us for the deposit that we found, the silver deposit at Yachtstay, that for which we have the PEA published from 2018. In addition to the 30%. If we can't fund, we dilute out to a carried net royalty interest, 1.5%.
So there's lots of bits and moving parts to your story. You've had to kind of piece it together over the years. And so you've got your small project financing, your kind of, I guess, your key focus, which is Velardena, which you hope can come good. So you won't make money on Rodeo because that's going to go straight back in the ground. Your project is a sort of 88 million NPV, 85, 86.
85,
yeah, NPV 8. So that in itself is, kind of, it's interesting. You've got to see what Barrick does and how quickly they move, but you're not in control. They are in that circumstance. But if they come good, it's really good for you guys. So do you feel that the market understands what it is that you're trying to do? Because as I keep saying, there's a lot of moving parts. They're quite bitty. There's nothing sort of significant that you're in control of. And do you think that's what you've been sort of punished for in the marketplace? Or is it a case of you haven't been able to communicate how you were going to solve the problem with Velardena?
I think there's certainly some wait and see attitude towards Velardeña in that we've shut it down twice. It's when you have a project that has had difficulties in the past, it's a challenge. The market sees it as more risky, and so it's a matter of, I think, understanding, and us communicating to the market that we actually do understand what we're doing now here, that we can move it from being a liability to being an asset that actually produces money. And I 100% agreed that these are not huge projects, but they're very significant for a 40 million market cap company when you start putting them together. So the NPV at Rodeo, 22, 85 at low gold prices for Velardeña. When you add in the potential value from Quevar, Santa Maria, we have 168 million worth of NPV on PEAs on these 4 projects for a $40 million market cap company, and they're low capital and we can put them into production. Additionally, we have a nice pipeline of projects that have larger potential that we haven't been able to explore based on the cash that we have in hand and the cost actually of moving or continuing to keep these other assets that aren't performing. So once Velardeña and Rodeo are spinning off money, and we actually have the ability to go forward with our exploration plans for Yoquivo in Mexico, district scale. It's in the Sierras. It's very interesting epithermal vein system. Has very, very good high grade values in the veins at surface. only a bit of a drilling program 15 years ago that wasn't adequately financed. It really, it's ripe for the plucking in a great part of Mexico. We have also a very interesting exploration play in Nevada that's just north of the old Sleeper deposit. It's in one of the major gold belts, has great evidence of mineralization at the surface. We've done an initial small drill program that we're still digesting that we'll put out there here shortly. But these sorts of the projects that will continue to develop and push along are where ultimately the great value for the company will come. If not, Barrick's discovery at El Quevar, then Yoquivo, then Sand Canyon. We have another excellent project in Argentina that I'm moving along. And I'm very confident that our pipeline will continue to produce interesting projects as we go forward.
Right. I guess the thing what I would like to understand is, can you demonstrate to me how you're going to make money for shareholders? Because if I'm looking at, okay, Rodeo will finance Velardeña, which will finance some exploration work on some large potential stuff. So it's all going back in the ground. I do, and I'm not discounting the Barrack arrangement. I think that's great. I like those sorts of arrangements. But what do you say to shareholders? You go, look, we're not, you guys are all getting paid. These guys are waiting for you to make money so they can, monetize their shares, hopefully, which are continue to appreciate, hopefully back to the 2016 heights. So how do you explain to shareholders that you are going to create value because these projects will cumulatively account for something rather than just plowing money straight back in the ground?
Yeah, and the projects produce more than the exploration projects will consume. Plus, you have to look at the fact that we're very undervalued relative to the value of these immediate production opportunities. So, on a valuation basis, what we saw in 2014, for example, when we announced the restart of Velardeña production, our share price went from 50 cents to over $1 in a day. On that decision. I expect something of that order, something similar to that when we actually start producing money from Rodeo, even if we're going to reinvest it, because we're no longer going to the market for our R&D, for our exploration. So that's the pivot right there, to become a production company, be valued as a production company, and have a path forward for the long term. So I'm not talking 2 years for Velardeña, I'm talking 10 years of production, sustainable production and more, that would lead to the sustainable funding of these exploration projects, which will in and of themselves spin off value, either through association with a large company such as Barrick, such as the Quevar example, or something that we could push forward ourselves if it were a bit smaller. Okay. So the key to the small market cap company, such as we are, in my opinion, is you have to have projects that are of a size that you can move them forward yourselves, or you have to have a relationship with a company who can. You can't just have a project that requires a $200 million capital investment as a $40 million market cap company and think you're going to do something with it. You will not be able to. Okay. So it's a process. And I think a track record that we have with the Barrick deal, with a deal with Electrum Group before on the Mexico property at Celaya here a few years back. We can find these properties, we can move them forward, we can do it in a way that will benefit our shareholders over the long run. And there will be an immediate or fairly immediate share price revaluation when we start producing gold. Okay.
Do you think the market trusts you, given the last 3.5 years' performance, to actually be able to deliver that? Because the decision making to the market has been slow. What would you say to that?
I think that we've demonstrated the progress based on these increasingly interesting evaluation PEAs that we're putting out there. That they're very well done PEAs. They're not you take a look at them and you see the level of detail in them. They're not a slapdash sort of PEA that the market often sees. These are ones that actually you can sink your teeth into and you say, well, these guys have actually put some thought into this and they know what they're doing. So yeah, I think so. I think the market is listening to the story. I think they believe the story, and I think we'll prove to them that we can do this here going forward.
Beautiful. One more question. I noticed in your 2020 catalyst, and it's been an unusual year. Obviously, everyone's been slightly disrupted, but it's in your presentation where we've talked about the 3 projects, but you mentioned 2 others. You mentioned Sand Canyon and Santa Maria. Why are you spending time on those?
Santa Maria was an option that we saw that we had our ability to get into production at very low capital cost while the Velardeña mill was all still running for Hecla. So we were looking at that as something that we could put into place sooner than the Rodeo project. In the end, it didn't look as low risk as we would have liked, and we had an agreement with a different company to buy it from us, to give us the cash to put into other projects. And I'm still looking at that option. So it's a project it's very interesting, but it's a bit too small even for us, and it would work well for a private Mexican company or for a smaller junior, micro, that could actually go out there and for less than $2 million have just under 1 million ounce silver stream on an annual basis for 5-6 years. So it looks insignificant, but it's not. It looks small, but it's a very interesting project in its own right, but not for us, more for someone else. So we'll hang on to it until we can sell it or get value back. We did invest some good money into it, thinking it would be perhaps a little bit bigger, perhaps a little bit easier to get started. It's there, it's very solid, just a little bit too small even for our company.
Okay, fantastic. Look, Warren, thank you so much. I mean, we love hearing these stories all the time. So do the watchers, subscribers, followers here. Good luck with that. With that piecing together the organic jigsaw puzzle which you are building. Hope it goes well for you. And do stay in touch. Let us know, as things progress, how things are going, please.
Thank you, Matthew. It's been great talking to you about it, and I'd love to carry on with the conversation as we go forward.